Good morning, and thanks so much for tuning in to Stocks to Watch on BloombergQuint. I'm Mathew. It's looking like it's going to be a muted start to the week for the Indian markets, but here on this program on Stocks to Watch, we're going to focus on three stocks that are likely to be in focus and more active in trade than others. My guest is Avinash Gorakshakar of Profit Mart Securities. Good morning, Avinash, and thanks so much for tuning in and for joining us on this program. I do want to start by asking you about KPR Mills, because I think it's an interesting stock. Of course, it is a bit of a seasonal play, but the latest update has to do with a capacity addition. It's having a new sugar mill with a capacity of 10,000 tons of cane per day and a power capacity of 47.5 megawatts, and finally also ethanol capacity of 230 kiloliters per day. And it's going to be, this plant is going to have a higher ethanol capacity, which the company believes is going to increase its revenue and profitability. And they are proposing to convert 30% of the sugarcane that's crushed into ethanol. It's going to cost them 500 crore rupees, and it's going to be completed within a time of 10 to 12 months. One, what's your view overall of this space, and how does KPR Mills rank when it comes to the pecking order?
Good morning, Alex. I think KPR Mills is one of those companies, which has a very solid positioning as far as the, garmenting and the yarn business is concerned. It's an integrated player. Sugar is a company which is, positioned in a subsidiary which KPR Mill holds. But coming to the main point, this sugar expansion is definitely going to be positive for the longer term, because considering the fact that 30% is going to be converted to ethanol, we believe that already, the company has a running ethanol capacity, and that would further aid, the existing capacity. Most importantly, the company has a very decent cash flow, a very strong, return on capital employed of 18-19%. So we believe that this expansion in phases would be funded largely by internal accruals and very little dependence on debt. So my sense, but definitely from a longer term positioning point of view, the business model is solid and the financial numbers are pretty strong. So I think investors who want to take a longer term call could possibly look at it. But obviously, since we have seen a decent run up on the stock price, I would not be surprised that, this kind of risk reward could happen only if investors try to actually accumulate the stock at slightly lower levels. But longer term prospects definitely appear to be solid, and I would not be surprised that possibly markets would look at this as a good positioning kind of bet, considering that some part of this expansion would now be reflected in FY22 and fully in FY23. So definitely longer term prospects appear bright, but definitely in the near term, possibly the stock could see a little bit of consolidation.
Yeah, and that's to be expected. One of several stocks that has run up, Avinash, in the recent past. Which brings me to the next stock, Oberoi Realty. The Realty pack, I think, was in focus last week, but this particular counter saw a bit of a correction on Friday, 4% correction. The news update that has come in on Oberoi Realty is that Even Star Hotels, which is a wholly owned subsidiary of the company, has purchased and taken possession of a hotel property that's situated on Dr. Annie Besant Road in Worli on Mumbai. And this acquisition was made for a consideration of just over 1,000 crore rupees. It is a 5-star hotel that is being operated and managed under the Ritz-Carlton brand. So, Avinash, really the context that we're speaking about this in is this COVID-19 pandemic. People aren't going out as much. Business deals perhaps happening more like how both of us are speaking. It's a digital connection rather than a face-to-face. This is where we're standing right now. So one might think, hi, it's a significant acquisition. What do you think about this update?
No, I think, in fact, Alex, in the very near term, the markets could be worried on this acquisition, considering the fact that you're right that, post-COVID also, I think, things are going to get, take some time for the hotel sector to normalize. And I think one could definitely say with a certain amount of certainty that FY22 may not be all that great. But going forward, once normalcy happens, I think this could be a very positive, accretive deal for the company. And most importantly, if you see the Q2 numbers, the company has bounced back quite significantly, both in terms of their domestic sales. Most importantly, the company is also looking at a lot of other value unlocking kind of propositions. So I think clearly from a longer term perspective, the markets would welcome this deal. Maybe in the near term, Alex, I don't think this is going to actually result in any significant amount of re-rating, because FY22 would again be a very challenging year. So, this property asset would obviously start contributing only from FY23 onwards. So, I would suggest that, investors who have the stock should hold on. It's a quality play in the real estate space. And most importantly, they're present in malls and now into hotels. So, this could definitely stabilize earnings going ahead.
But in terms of your pick in the realty space, would this be your pick, or would you go for something like a Godrej Properties instead?
I think in the real estate space, the larger players like Godrej Properties, or typically something like a Mahindra Lifespace, or even a company like Sunteck Realty, Alex, would definitely be a much better bet. In fact, Sunteck Realty has now commissioned some part of its, affordable housing project. And I would not be surprised that there the risk reward looks significantly better. They have been largely players who have been operating in the BKC space. And I think their margins as well as their top line and profitability has been quite decent. So I think from a longer term perspective, I think one could look at all these three stocks, but definitely Oberoi Realty could be a stock could be purchased only on declines.
Absolutely. Okay, which brings me to the next counter, and really it's the big boy, Reliance Industries. We haven't spoken about it, Avinash, in the recent past with regard to its hydrocarbons business. We've spoken about retail, we've spoken about geo, but the latest update has to do with its hydrocarbons business. It has, along with its partner BP, announced the commencement of natural gas production from Asia's deepest project. This is the latest update, putting the second wave of discoveries in the KG D6 block on stream. So how do you rate this latest update, and also in the context of what we're seeing play out in the crude oil market? There are estimates or projections that we could see an uptick in the crude oil space. Of course, it's under pressure at the start of this week because of the COVID-19 breakout in the UK and also in Europe as well as the US. But we're expecting that the prices could go up. How do you see Reliance in the context of all of this playing out?
I think, Alex, this news is definitely a big positive surprise for the hydrocarbon business and the oil and gas space, because this would contribute significantly to the country's crude oil production. And I think the find in this oil block has been quite significant. So my sense is the earnings impact could possibly come in FY23. But definitely, I would not be surprised that you could see a decent uptick in the Reliance stock today, because this is definitely a long-awaited kind of development for the markets. And despite the fact that the oil and gas business does not enjoy that kind of high sentiment, unlike the retail or the geo business, I would be quite positive on the company on the longer term. I would believe that we could see an earnings accretion of at least 3 to 4% in FY23 coming from this deal alone. And most importantly, I would not be surprised that going forward, if crude prices obviously if they move up, then that could put a little pressure on the company's gross refining margins. But then, since this is a pass through for Reliance, I would not be surprised that margins, the company could easily maintain what they are currently doing. So net, I think it's a big positive for Reliance. Maybe it may not result in any earnings upgrade immediately, but I would believe that after FY22 onwards, you could see definitely some element of earnings accretion coming from this deal. So net, a long-term positive.
Long-term positive. Oh, that brings us to the end of this particular conversation. Avinash, pleasure as always speaking to you this morning. And do stay tuned to everybody who's watching Stocks to Watch. We've got a lot more coming up in just a short while, and you'll find all the news and updates in the world of markets and business on BloombergQuint.com.